Hey there, Dan Fitzpatrick here on a bloody Monday, April 16th. See what happens when everybody does their taxes over the weekend? Nobody's happy. Okay, look, in this video we're going to look at dangity dang. This is a stock that had really been rewarding, guys. I know our folks in the Stock Market Mentor Forum have been all over this for a while. I had it for a little bit, but frankly, on a scale of 0 to 10, I probably had about a 2 on it. But a lot of folks made a lot of money. But what do you do with it now? Okay, I had noted over the weekend, and I don't think it was in this free chart of the day. I think it was in the weekend update. I'm not sure. I'd noted though this kind of thing here. It's like a flag pattern. Maybe I was talking about this in real money. I don't know. I post too much. But here's the deal. We have the support. When this stock opened up today, and this is just not about Dang, this is about any stock. When the stock is so overextended and it opens up below support and doesn't rebound right away, you've got to be getting out of that stock. You have to get out of the stock. It wound up dropping 15% today. You have to get out of the stock, and you can say, well, I can't do that because I'll take a loss and I don't want to do that, and besides, this stock's going to move up again, so I'll just hold it. Okay, fine. Well, here's the deal. Here's your two-part program then. You know the stock is going to bounce up. You know the stock, you don't want to sell it now here because you bought it here. You don't want to sell it here, right? And you know the stock's going to move up higher. That's cool. That's great. Good for you. Kreskin, the mind reader. So here's what you do. It's a two-part program. Sell the stock, period. That's step one. Step two, when the stock starts moving up in the direction that you absolutely know it's going to move up, then you buy the stock back. You'll do one of two things. You'll either get the stock cheaper because you'll have sold it here. Let me zoom in a little bit more. You'll get the stock cheaper on this two-part plan because number one, you sell it here because it didn't bounce back right away. Number two, you buy it someplace here and then the stock moves up and you turn out to be super trader. That'll be step one. Or you sell the stock here, the stock runs up without you, and you wind up having to buy the stock back here before it moves up to there. You didn't catch the exact bottom, but you did still get quite a bit of the run, making you almost super trader, but not quite. What's the difference? Only difference is that you bought higher or you bought lower. What's the constant? The fact that you sold the stock when it broke support and did not immediately return above support. Now, on this two-step program, this two-step plan of selling when a stock breaks below support with the idea that you're going to, number two, second step, buy the stock back when it starts rallying up above support, most of the time, not all the time, but most of the time, you're never going to get to the second step. You are never going to get to the second step because the stock won't come up. How's that working for you? How's that working for you? How's that working for you? So the point is, let's get to a real chart here. So the point is, and we're just looking at Dang here, if you just have one step, buy, the video hasn't stopped. That's your step, buy. And then you have a second plan. Your other plan after you execute that one-step plan, buy. Your other plan is when the stock gets up to a really, really nice profit, sell. Okay, if those are two plans that you have, I'm telling you that's not going to get the job done. It worked really great in 1999. Okay, but then we were partying like it was 1999, written by some, really skinny guy who loved purple. This is not that. And so I'm telling you, here's the deal. If you want to stay in this market, but you have these little stocks that you like, you will save so much money. You'll actually make so much money by losing less. You will save so much money by simply not being wedded, W-E-D-D-E-D, by not being wedded to your position after you take it. I'm telling you, you have to look at a position. You look at a stock. Before you buy it, you say, okay, I'm buying it at X level. If it falls to such and such a level, that means that I'm wrong and I'm going to go ahead and sell the stock. Now, here's where a little bit of the art comes in. If it falls to, quote, that level, whatever it is, the oops, I'm wrong level, if it falls to that level, you may want to sell it outright. Or you may say, well, maybe I set that stop a little bit closer, but I'm watching this puppy right now, and if it doesn't bounce back right away, then maybe I didn't set the stop too tight. Maybe I'm just lucky that I'm getting out early. If that's your approach, and I'll say that in English, if that's your approach, you're going to find out that you make fewer bad trades. You might make a trade here and there that, I lost a little bit of money, lost a little, crap, that was kind of a, shouldn't have done that. You're not going to make any bad trades. You're just going to make some losing trades. That's why they call it trading instead of money harvesting. We lose some. You will avoid taking the big loss when you have a two-part plan. Buy and then sell when the stock gets to such and such, and then I'll either buy it back when it's lower, or if I realize that I shouldn't have sold it and the stock starts to run higher, I'll buy it up. When you start doing that, you're going to find out that you're trading better. You're also going to be making better decisions all the way around. So now what do you do with Dang? Probably going to see an oversold bounce tomorrow, just because that's what these goofy stocks do. Would I buy it? No. If you're still long the stock, then sell it into any kind of strength. My prediction, if I can be so bold, is that we're going to test the 50-day moving average here, which is 755. I don't have an opinion as far as whether this is even going to pass the test. This is a Chinese stock, which by definition, nothing against my Chinese friends, just the Chinese business community and the government, by definition, you can't trust anything that's on this company's books, period. Read PUDA, P-U-D-A, look it up. You can't trust anything here, so you have to watch the technicals. Technicals say this stock is broken. Who is going to buy this stock? Is it going to be the fund manager at Fidelity, Magellan, something like that? I don't think so. It's going to be Jethro Stokes, who's trading in his mother's second bedroom while eating cold pizza from last night's Xbox game session. Nobody's going to be buying this stock on this dip except probably short sellers. So I would suggest any kind of rally back up, that's the time that you want to be selling this stock. And if you aren't long this stock, if you're not in trouble on this stock or something like that, just move on, because there ain't nothing here that you want to mess around with. Okay, that's it for this video. Members, get to the strategy session. I got a lot to say about today's market.